Debt can be a powerful tool to create wealth and avoid taxes if you know how to use it wisely. Now, let's talk about 7 ways you can use debt to make money. Number 1. Tax avoidance. One of the main reasons why rich people use debt is to reduce their tax liability. How does this work? Well, when you borrow money, you have to pay interest on your loan. This interest is usually deductible from your taxable income, which means you pay less taxes. For example, if you earn $100,000 a year and pay $1,000 in interest on your mortgage, you can deduct that amount from your income and only pay taxes on $90,000. This can save you thousands of dollars in taxes every year. But that's not all. Rich people also use debt to avoid paying capital gains tax on their investments. Capital gains tax is the tax you pay when you sell an asset for more than you bought it for. For example, if you buy a stock for $10 and sell it for $20, you have to pay tax on the $10 profit you made. However, if you borrow money to buy the stock instead of using your own cash, you can defer the tax until you repay the loan. This way, you can keep reinvesting your profits without paying taxes on them until much later. This strategy is called buy, borrow, die, and it is used by many billionaires to avoid paying taxes on their wealth. For example, Elon Musk, one of the world's richest men and founder of SpaceX, has reportedly borrowed billions of dollars against his Tesla shares and used the cash for his living expenses and other ventures. By doing this, he avoids selling his shares and triggering capital gains tax. He also benefits from the appreciation of his shares over time. And when he dies, his heirs can inherit his shares at a stepped-up basis, which means they can sell them without paying any tax on the previous gains. Number 2. Leverage. The second way that rich people use debt to make money is by leveraging their portfolios. Leverage is using borrowed money to increase your return on investment. For example, if you have $100,000 in cash and invest it in a stock that goes up 10%, you will make $10,000 in profit. But if you borrow another $100,000 and invest it in the same stock, you will make $20,000 in profit with the same 10% increase. That's a 20% return on your own money instead of 10%. Of course, leverage also works both ways. If the stock goes down 10%, you will lose $20,000 instead of $10,000. Leverage can allow you to achieve returns that other investors dream about. For example, Warren Buffett, one of the most successful investors of all time, has used leverage to boost his returns for decades. He borrows money at low interest rates from his insurance companies and invests it in undervalued stocks that pay high dividends or have strong growth potential. He also uses leverage to buy entire companies that generate steady cash flows and profits. By doing this, he earns more money from his investments than he pays in interest on his debt. Number 3. Shorting. Another way that rich people use debt to make money is by shorting stocks or other assets. Shorting is borrowing an asset from someone else and selling it in the market with the expectation that its price will go down. Then, you buy back the asset at a lower price and return it to the lender. You keep the difference as your profit. For example, if you short 100 shares of a stock at $50 each and then buy them back at $40 each, you will make $1,000 in profit. Shorting can be a very profitable strategy if you are right about the direction of the market or a specific asset. For example, George Soros, one of the most famous hedge fund managers in history, made billions of dollars by shorting currencies such as the British pound and the Thai baht during financial crises in the 1990s. He bet against these currencies because he believed they were overvalued and unsustainable due to political and economic factors. He was proven right when the currencies collapsed and he pocketed the difference. Number 4. Business debt. The fourth way that rich people use debt to make money is by taking on business debt. Business debt is any debt that is used to finance the operations or expansion of a business. For example, a business can take out a loan to buy equipment, inventory, or property. A business can also issue bonds or sell shares to raise capital from investors. Business debt can be a good thing if it helps the business grow and generate more revenue and profit than the cost of the debt. Many successful entrepreneurs and business owners have used debt to start or grow their businesses. For example, Jeff Bezos, the founder of Amazon, borrowed $300,000 from his parents to launch his online bookstore in 1994. He also raised millions of dollars from venture capitalists and public markets to fund his expansion into other products and services. Today, Amazon is one of the largest and most valuable companies in the world, and Bezos is one of the richest people in the world. Number 5. Real estate. Another way that rich people use debt to make money is by investing in real estate. Real estate is any property that consists of land and buildings. Real estate can be used for residential, commercial, or industrial purposes. Real estate can generate income from rents, leases, or sales. Real estate can also appreciate in value over time due to supply and demand, inflation, or improvements. Real estate is one of the most popular and lucrative investments for rich people. They use debt to buy real estate with a mortgage, which is a loan that is secured by the property itself. A mortgage allows them to buy more property than they could with their own cash. They also benefit from tax deductions on their mortgage interest and depreciation expenses. They can also use leverage to increase their returns by refinancing their mortgages or taking out home equity loans to access more cash for other investments. For example, Donald Trump, the former president of the United States, built his fortune by investing in real estate. He borrowed millions of dollars from banks and investors to buy and develop properties such as hotels, casinos, golf courses, and skyscrapers. He also used his brand name and celebrity status to license his name to other developers for a fee. He claimed to be worth billions of dollars based on his real estate holdings, although his actual net worth is disputed. Number 6. Free up money to invest. The sixth way that rich people use debt to make money is by freeing up their own money to invest in other opportunities. Instead of using their own cash to buy assets or fund their businesses, they use debt to finance these purchases or expenses. This way, they can keep their cash available for other investments that may offer higher returns or diversification benefits. For example, Mark Zuckerberg, the founder and CEO of Facebook, borrowed $6 billion from Morgan Stanley in 2012 to pay for his taxes on his stock options when Facebook went public. He did this because he didn't want to sell his shares and reduce his ownership stake in the company. He also wanted to keep his cash for other investments such as Instagram, WhatsApp, Oculus, and philanthropy. By doing this, he maximized his wealth and influence while minimizing his tax bill. Number 7. Lifestyle. Another way that rich people use debt to make money is by enjoying a lavish lifestyle without sacrificing their wealth. They use debt to pay for their personal expenses such as cars, yachts, jets, art, jewelry, clothes, vacations, etc. They do this because they don't want to spend their own money on these things that depreciate in value or have no income potential. They also do this because they can deduct some of these expenses from their taxes as business expenses or charitable donations. For example, Richard Branson, the founder of Virgin Group, lives on a private island in the Caribbean called Necker Island. He bought the island for $180,000 in 1978 and turned it into a luxury resort that he rents out for $80,000 per night. He also owns several other properties around the world that he uses for his personal or business purposes. He also owns several planes and boats that he uses for travel or entertainment. He pays for these expenses with debt that he borrows from his companies or banks at low interest rates.